Our guest today is Marc Boroditsky, Chief Revenue Officer of Nebius, one of the fastest growing companies of all time. In just 1 year, Nebius went from essentially zero revenue to a multi-billion-dollar neocloud, providing AI infrastructure to both the world's largest enterprises and the fastest growing startups. Just last week, Nebius reported 400% year-over-year growth in their core business, and they guided their run rate to scale from roughly $1 billion by the end of this year to around $8 billion by the end of 2026. Marc, congrats to you and the Nebius team, and welcome to the podcast.
Thank you, Addy, for such a generous introduction. It's a pleasure to be here today.
It does feel like meeting a childhood hero, even though we've just been covering Nebius for like half a year, to be honest. But okay, we do want to start with the big one, the big deal. So Nebius closed an almost $17 to $20 billion deal with Microsoft, and now another $3 billion deal with Meta. And Marc, obviously, I am curious, how involved were you personally in landing those deals, and what did it take to win those deals?
Well, first of all, it's an entire company effort. There's no question about it that many folks in the organization are necessary for us to not only consider or be considered for these kinds of transactions, recognizing these are some of the most iconic companies in the world, for them to be relying upon a company that, as you pointed out, has only been around for a year with commercial product and a couple of years in actual existence. They're actually looking at the entire organization and our ability to deliver in order for them to rely upon us as a supplier. Got to also credit the fact that Arkady and our leadership team is well known to the overall compute and infrastructure community because of the accolades and successes they've had in prior lives. Building Yandex and building scale infrastructure for their previous businesses is actually very well respected. There's a lot of organizations that have former Yandex employees in them that are extraordinary and highly capable infrastructure professionals, that all of this comes together to give us a very unique position with these kinds of organizations. That being said, answering your question specifically, Daniel, our corp dev team was leading the way for this transaction, and they're the ones that deserve all the credit for actually negotiating this scale of an opportunity. I can't take credit away from them. I have to take my hat off and give them kudos for the great work that they did. Our legal team, our platform team, the supporting technical teams, and our infrastructure teams were all pulled in to be able to win the confidence and then complete the transaction.
Awesome. So team effort, even more bullish. And you're guiding for $7 to $9 billion in ARR by the end of next year. Half of that is already contracted, so the demand is clearly there. The only question, I think, is how fast can you actually build out these data centers? Because the guidance of 1 gigawatt of 800 megawatt to 1 gigawatt of connected power would make Nebius one of the most aggressive data center build-outs ever. What makes you confident Nebius can actually add so much capacity this quickly?
Well, it's a multiple of what we've done in the recent history, but at the same time, it's applying the same principles, which is that we're building, these are my words, an agile infrastructure company. We're applying the principles that you use for software, which is multi-threaded, going down simultaneous parallel paths in order to be able to deliver greater and greater functionality. We're doing that with the contracts that we're signing for new locations, for additional power, lining up the supply chain so that at the time that we have the demand, we can actually deliver the capacity. So the plan that Andre shared on the earnings call, this is already in flight. I'm not saying it's slam dunk and done, but we're already working towards delivery of that capacity on a schedule that supports the forecast and guidance that we provided, against $7 to $9 billion for next year. So this is taking the same principles we applied to get to the multi-hundred megawatt capacity we have right now and expanding it into 26. And then setting us up for the 2.5 gigawatts of contracted power that we'll also be signing for future expansion into 27 and beyond.
And maybe silly sounding follow-up, I do think it's important for the viewers, and just for clarity, how do you actually define contracted versus connected power? And I want to ask this question because there's a lot of companies out there right now that have multi-gigawatt pipelines, and I think there's a difference between an Excel sheet, connected power, contracted power, monetized power. So for you guys, Nebius, contracted versus connected power. How would you define those tools for an amateur?
I mean, Andre's team is very careful not to give out half-baked or incomplete work. He's very, very sensitive to that. And he wants to make sure that what we're sharing is ready to be consumed. Contracted is that we actually have a contracted commitment by a supplier to provide us with the energy capacity. Connected is it's in production. So we actually have the energy being delivered. That's a big step forward, both in terms of the physical delivery, but also the commercial reality, setting us up for actual delivery of the data center, filling it with GPUs and selling it to customers.
And in your recent Q3 earnings call, you mentioned that you developed a new sales skill, right? Which is turning down customers because demand exceeds your available capacity. If that is the reality today, I told people on Twitter that we will be interviewing you. And a very frequent question was, if that is the case, why not, or are you increasing your pricing? Can you walk us through your thoughts on that?
We are, absolutely.
That's what I wanted to hear.
We are. Let me be sensitive to our customers that are out there listening. Absolutely a challenge, okay? The reality is that that there is an extraordinary amount of demand for the limited supply that we have, and opportunity is to work with customers that are delivering more and more valuable workloads. And for that, we're actually able to derive a premium price. Now, that being said, we're also looking strategically. And we've actually put in place a set of principles that we're using to guide us in prioritizing transactions. The top of the principles list is the most strategic types of customers, enterprises, big software vendors, scaling, AI natives, and then on down to our startup AI companies. So being able to actually land and then start to build towards where we see the future is, which is to be able to cover the entire landscape, the entire market of opportunity is the focus. With that comes the opportunity to sell more to those customers, which means we have to be setting up the capacity to do that and building long-term relationships. So while we are learning to turn people away, that's for today. We're trying to be diplomatic and delicate. We want to build relationships with all the high-performance companies that are out there to have them set up to be long-term partners of ours. So saying no today and keeping the door open for yes tomorrow is what we're trying to do with all the customers we're interacting.
Staying on the topic of being supply constrained and seeing so much demand, different experts predict that there will be different bottlenecks in AI. Some say it's chips or power. Some even say land or regulation. From your perspective, what are the real bottlenecks in AI that you actually see?
We're very fortunate with regard to what we're seeing demand-wise, and we're not, going to be insensitive to the fact that things could change. But our confidence right now is demand is accelerating. We're not yet at the place where we're covering the entire market. So from at least the Nebius lens, and I think more broadly the market lens, we've got a large amount of opportunity ahead of us. With regard to chips, we have a very privileged relationship with Nvidia. I've seen it, the way Jensen shows up. As a matter of fact, our team's at a conference this week, and they sent over a picture of a mug that Jensen came by and signed and said hello to Arkady and the team. So we get a lot of really positive attention from Nvidia, and we collaborate with them at every single level. I've never seen this kind of privileged partnership in any of the experience that I've had in the past. So we have been able to set up and gain access to the supply that we need. The real challenges are the physical and the capital. The physical being land and connected power, and capital, which means that we need to have the capital in order to be able to build and then fill the facilities with GPU. Those are the bottlenecks. I think we've set ourselves up very well in terms of the contracts that we're signing right now for power and locations, as well as the work that our corp dev team has done to continue the inflow of capital, both in terms of the structure of the transactions that we're doing, as well as setting ourselves up with the ATM that we announced and starting to line up debt at the appropriate time when it makes sense to continue the necessary inflow of capital to build out the infrastructure that we sell.
Double clicking on the power bottleneck that many people talk about. Can you share anything? It can be very, very high level. Just curious, because a lot of the people who like Nebius generally like AI infrastructure. Can you share anything with us regarding how you're currently preferring to, what kind of power sources you're preferring?
Candidly, we work with the local providers to figure out the right combination of energy. I heard it well described by Andre recently on a call where he explained that we may be doing short-term energy configurations that might have us transition over time to something that's more permanent, off the grid and off of local suppliers. But ultimately, we're open to all forms of energy supply. It's not the primary business we're in. We don't want to be an energy producer. We want to be an energy consumer. We want energy that's going to be supporting our unit economics. So it's critical in the way that we ultimately negotiate the location that we're ending up with energy that actually meets our price bogeys in order for us to be able to sustain the margins that we are going to be delivering in the business that we're generating. I think you heard this on the earnings call. A lot of the decisions we're making are based on ensuring that we're supporting the long-term margin outlook that we think is necessary to be successful in this category. So while I can't give your energy, enthusiasts some interesting insight about sustainable or nuclear or gas, I'm sorry, but I can tell you that it's very financially driven, and we're very flexible in the way that we configure our transactions.
Yeah, one thing that was clear in the call is you're focused on margins. You're obsessed with good margins, which is of course great. So just to confirm, this might sound a bit redundant, but some people on Twitter are skeptical about Nebius, which is of course not us, but some people said that it will take multiple years to get grid connected power. But what I heard from you right now is that basically you have intermediate solutions figured out, and that's just not going to limit you from crazy growth.
That's yes is the simple answer. But I think that it does require a little bit more nuance. And I'm not going to answer it specifically right away. I'm going to say something else. We have a unique team. The humans that Andre has in his organization that are doing diligence on these opportunities are super experienced. We talk about dirt up. It is literally dirt up. We're looking at brownfield. We're looking at locations that I'm sure everybody else is looking at. They're highly competitive. But we're very quick in being able to do our assessment. We're very capable to identify the opportunities that are most valuable, and we transact very quickly. The corp dev team that we talked about earlier in the strategic transactions, they're ready to work all night in order to be able to complete a transaction. By the way, that attitude pervades the organization. It might be a 1,000+ person organization, but we still have that thirst and drive of a startup that's trying to win the next hill in order to get to the mountain. So as we're contracting, we're moving a lot faster than competitors. And as a result, we're getting a lot of premium opportunities. And we're more capable to work with it in a flexible configuration. So we are looking at all different types of opportunities that maybe sneak by the observers that you mentioned, that as we start to reveal locations and start to reveal our plans in coming quarters, I think they're going to get confirmation that they were missing in their original analysis.
Love that one. Okay, moving on to a topic where you are clearly one of the absolute experts in the org, B2B SaaS and some metrics. So some people might think that your growth in AI is not sustainable. It's just by adding new logos, adding new customers. But we actually think that people underestimate how much of your growth is driven by the expansion of existing customers. And I already prefaced this on LinkedIn. We had a quick chat about this. Can you share, even if just high level, the metric that I am awaiting every single earnings call on is net dollar retention. Is there anything you're seeing across existing customers today, or maybe what you're looking for, what you're targeting over the long term, just anything? I'm happy for anything you can share.
Daniel, it's an incredibly important statistic, okay? And you're right. In past lives, we obsessed with NRR, GRR, expansion rate, period on period, year on year, customers cohorts. We were always looking for where's the growth, where can we pour more gasoline on in order to be able to get more growth. We have the challenge that our year on year compares are thin, because as you pointed out earlier in the call, we basically came from nowhere 5 quarters ago. So it's not yet something that we share openly. What I can tell you directionally is that we have much higher than you would expect growth rates. What I can tell you is that quarter on quarter, it's the most robust type of growth that I have seen. So let's take it a layer lower, and what I care about, which is looking at major accounts. So think of it as scale AI companies and software vendors. We have many relationships that are more than doubling quarter on quarter. We have many relationships that are growing at above SaaS growth rates. Okay, in other words, they've started with a use case, they've expanded that use case, they've started another use case, and they're expanding that other use case. Also, the workloads, we tend to have been successful at winning the model building training workloads, which is really spiky, okay, and a little less predictable. We're now also winning the retraining workload, so I get more data and I want to be able to apply that to improve my model. And we're now winning also the inferencing workloads, which, by the way, that's what we all should be paying attention to, because real commercialization of AI is inferencing. And we announced this past quarter the Token Factory, which is our inferencing solution, which is helping us to service those workloads. And I can tell you that inferencing is contributing more and more to our results, and the expansion rates on inferencing are more reliable as compared to the spikiness of model building. And I think we're going to be able to share more about that in the coming quarters, be able to satisfy your drive, Daniel, to understand what's going to expand on expansion-wise.
That's amazing to hear. And by the way, the reason why Ali and I are so interested in Nebius, or why we got interested in the investment in Nebius, was because basically our thesis is that inference demand will literally more than 1 billion X. I think people don't understand how many factors you have that it's going to lead to crazy growth. Like actually crazy, because there'll be agents using agents, bigger, like you understand this. I think most people don't understand. This is like an orders of magnitude bigger than human brains. Human brains do not understand exponential growth. They don't. Even I sometimes think I'm not bullish enough. But on paper, I think this is ridiculous. This will not be possible.
You're completely right. As people, today we're seeing AI as sort of like a tuck-in feature. Copilot sitting in the corner. There's a button to push and get a transcript. You can do some research in the chat window. That's great. The app that we're on right now is going to get replaced. Actually, all the apps that we have are going to be rewritten. They're going to be rewritten so that they're largely generated through continual inferencing. Every pixel on the screen, every piece of functionality can be not just enhanced, it can be generated on the fly through inferencing. Now, some applications are just fine the way they are. Nobody needs a new calculator, okay? But do we want to have like 3D virtual, video-rich, data-rich experiences for collaboration, for next generation versions of all the different SaaS apps we use to run our businesses, or for consumers to interact with vendors and media and each other? I think there's going to be a massive transformation, and you're going to see not just little tuck-ins of functionality. You're going to see wholesale overhaul and replacement of a lot of the things that we use today. And the race is on. The vendors are trying to build this stuff. We're seeing, the glimmers of light, or the blades of grass in the open field that are going to fill in as people deliver more and more of this.
Love it. Yeah, people lack imagination. Even the calculator example you mentioned, there could be AI inferencing going on in the background, double checking if the number you entered into the calculator was the right number, and like autocorrect for not like. But yeah, let's not even go there. People will lose their minds
to this.
No, you're right, Daniel. You're right. I lack the imagination. You got it.
You cannot have enough intelligence, basically. That's how we think about it. So you maybe one last question about the metrics, and then over to Ali again. You said in a past life you're obsessed over net revenue retention. Maybe, since you're the expert right now, what metrics would you recommend Nebius investors to focus on right now to assess how well Nebius is doing? Obviously, in the beginning, I like to look at ARR and year-over-year growth and quarter-over-quarter growth. Are there some less obvious metrics that you think are very smart to observe?
Well, I mean, there's the metrics that we share, and then there's the metrics that we don't. And unfortunately, many of the metrics that have the most meaningful potential are not shared, and they're highly sensitive. In terms of visible metrics, I mean, you should be taking a look at margin. We should be looking at margin in this category across all the businesses, because getting to a sustainable, reliable business is going to be driven by margin. And we are margin obsessed, as you've already called out. And we've already given guidance about our outlook for EBIT margin, and we have confidence about being able to deliver that. And I think we're going to actually see over time, as we deliver more and more software and we deliver more and more adjacent functionality, that we can even do better. If I were just observing the category, and this is not like a metric per se, I'd be watching the wins that are taking place. Okay, I think the market is staging itself in a very similar fashion as we saw with the CPU version of this story. So as the AWSs and the hyperscalers built out, I've got gray hair if see it. So I was a active participant in that chapter of computer history, and in the early days, it was all startups. Okay, AWS was winning all kinds of developers to build their app on their platform, and they built out the adjacent spaces and more functionality. They went past CPU to storage to all of the adjacent capabilities that people need in order to be able to operate at scale. The same thing is going to be happening with AI. And as they progressed and succeeded, they made their way up to software vendors and to scale enterprises. We should be looking at, in AI, what are the wins that are taking place on platforms? Are they on the hyperscalers, or are they on this new generation of hyperscalers? By the way, I don't like the term neocloud, so prefer to say that this is the next generation of hyperscalers. But are we seeing the wins going to them, or are they coming to us? And what kinds of companies are there, and what kind of expansion are they generating? What I think is going to be happening, and I'm already seeing it in Nebius, is because of the specialized approach that we're taking, focusing on the AI engineer, which has a different set of needs than a DevOps engineer, which is what AWS, GCP, and Azure tend to service. By taking care of the AI engineer's needs and building out more and more specialized functionality around AI workloads, we're going to win more and more of those individuals. They're going to bring their projects, their companies, their business to us, and that's going to span startups to software vendors to enterprises. And we're going to start to share with you more and more of that success, and that's what you should be focusing on. Are these in production inferencing customers scaling with you? And I should be telling you the story that they are.
Very excited to see you share more of that. And by the way, I did tell Daniel right before this, I don't like neocloud, the word as well. But you mentioned margins just now. Speaking of margins, or rather like business models or businesses with very different margins to Nebius, we've seen many Bitcoin miners pivoting into building AI data centers. Do you think their skills and expertise translate into building world-class AI infrastructure?
Addy, it's a great question. And that's actually a really important question. I think that's part of the confusion that's going on today in the broader market. And by the way, that's not just the stock market, it's also the commercial market. It takes a lot of discipline to build a scale infrastructure, okay? It's not something that you just wake up and decide you're going to do. You better bring a lot of expertise and experience. I mean, you're talking about deploying billions of dollars worth of hardware, and it's highly sensitive, very specific hardware, and having the right skills to do that. And that's skills that, we talked about earlier: power, the data center, implementing the racks, the power systems, the cooling systems, the laying down the software, putting in place the controls and the tooling to manage the infrastructure. It's not something that you just take what you learned in, I don't know, IT class to manage a CPU host and transfer it over to a GPU host and then do it 100,000 times over. No, it takes a lot of skill. I would put our hundreds of engineers that have been doing this for more than a decade up against any other company. They're super skilled. Now, could these companies be successful? Right now, I mean, the market is supply constrained. And, if you need something, you're probably willing to take less from a less optimal or less skilled supplier. So yeah, you can see wins going to them, and you could see potentially some degree of success. But in the long run, when you get to the real workloads and people are worried about reliability and performance and where their data is, security, I think they're going to struggle. I think you're going to see established, capable players that have the pedigree and depth of skills will win out. And I think that's Nebius.
Yeah, but by the way, we think it's not just the AI engineers that are super stacked and smart in Nebius, but just the entire team. When Daniel came to the UAE a few weeks ago, we met this random person on your team, Nebius, manning the stand at the GITEX conference. And we found out after speaking to him for like 10 minutes, he used to be a professional chess player. The team constantly comes out with surprises. But yeah, these Bitcoin miners, they are good at some things. If we filter for just the very best of them, have you ever thought of any of them as potential partners or even M&A targets for you?
When the market's crazy, it makes strange bedfellows. And I wouldn't build any model. I wouldn't build any forecast off of, the crazy time. But yeah, it's possible during the crazy time. And I think our team is super creative, and I know that we look at a lot of different options. And I suspect that we pass on many of them because they don't check all the boxes. What I mentioned earlier. We find unique opportunities, and we execute quickly. And I suspect if there were unique opportunities in this category, we would have already executed on them. We do like operating our own hardware. We do like building our own infrastructure. We do prefer being in control, and that benefits everybody. Knowing and controlling every detail makes a big difference in terms of the unit economics, the reliability, the performance, and our confidence that we're going to be able to operate the infrastructure for the long term.
Yeah, totally makes sense. The reason why I just think about M&A potential in this area is because I think Nebius has if you are aware of the situation we're in, is like some plots of land and grid connected power are definitely valuable. And because Nebius has a superior model and capacity is a limiting factor, the way I think about it is just if Nebius in the long term gets 3, 4, maybe let's say just 50% more, or even twice as much revenue per unit of power, then wouldn't it in theory make sense to buy out assets? When it comes to the culture and the team, I'm very skeptical. I don't believe in decreasing the quality of team, if that makes sense. But I do believe some have valuable assets. But obviously you cannot comment on that. So moving on.
I will say something to that though, Daniel, and it's a good point. We're back in the crazy market, and the values don't make sense. Okay, so on those companies, I think that they're going to expect something that's way beyond what we think is rational. So maybe in a pullback, there's an opportunity. Obviously can't say much more than that, but I don't think it's a top 5 priority for us to be looking at those. It would be very unique if it were to occur.
So Roman often mentioned that he did this for many months now on podcasts. He mentioned that he thinks that the GPU rental, bare metal business will become a commodity business. Do you think that business model is sustainable? We already agreed that it's at least us 3 right now are not the biggest pure infrastructure bulls. I would say that's fair. But do you think it could even become a dangerous race to the bottom on pricing?
There is a sector of the market that is comfortable taking bare metal and laying down all of the necessary software, taking on all of the necessary operational management, servicing and supporting themselves. Okay. It's a subset of the market, a very small subset. If you look at the total addressable market, which we're not anywhere near seeing demand from all the sectors, 2/3 of all IT spend comes from enterprises. Okay, and when I say enterprises, I don't mean just big companies. I mean established legacy organizations. The Raiffeisens, the Procter Gambles, the Pfizers, and they're not going to want to lay down everything. They're already showing the signal in terms of the way that they're handling their future workloads, which is they're moving to service providers that actually provide a full stack of capabilities. That's why the hyperscalers have gotten to where they are. We're going to see the same thing here as well. I think that the needs of the broader market will be beyond just the hardware. They're going to want to be able to have a fully integrated, highly optimized set of functionality that they build on top of. They care about what they use the infrastructure for. If they can avoid having to operate the lower layers, that's better for them. Even if it actually saves them money in terms of the cost per megaflop, it's going to lose them money in terms of the cost of operating inside of their organization. So I think you're going to see the same movie play out, that majority is going to be serviced in a fully integrated fashion with all the necessary components being delivered by a supplier like Nebius. And there will be certain situations where, yeah, you know what, this is so commodity, it's so basic, I'm okay taking the risk and operating the infrastructure on the side. And by the way, I don't want that business. I want the premium business. I want the value creating business that's connected to making a difference in our customers' customer experience or revenue performance. That's where we want to go so that we can actually drive a margin advantage in the market.
Awesome. We actually have some questions on the vertical integration. That vertical integration is one of the things that switched us on to Nebius in the beginning, actually. But last one on market landscape. On a lot of your interviews, which I think I've seen all of the public ones now, you mentioned AWS a lot. And as investors, we often benchmark Nebius against AWS, Microsoft Azure, Google Cloud, all these companies during their hypergrowth phases to assess what ARR multiple should be applied onto Nebius. The comparison implies an 8 to 12x ARR multiple. But do you think there's anything we could be missing? Any key differences between the AI neoclouds,
the new hyperscalers, and the old hyperscalers,
and the previous generation of cloud providers?
Well, I'm not going to do your homework for you, because I don't want to give you that advice. But I think there's a third category. Okay, I think there's three categories of players in our market. There's the data center like bare metal players, and there's a whole bunch of existing comps that are more digital real estate than, let's say, high technology. And I think we just talked about them as bare metal players. There's the hyperscalers, which in order to be able to operate their business, they are focused on trying to make every workload cookie cutter. And it's critically important for them to have uniformity in the way that they deliver, for them to get the unit economics that they need in order to be able to handle and deliver the business they have. So they would prefer commoditization in the way that their services are consumed. I think we're at a critical stage in AI, and I think it's going to be for the foreseeable future where specialization is necessary. The workloads for, I don't know, a drug discovery company, for a robotics company, for autonomous driving, for producing non-player characters in the background in a game are very different. And being able to service the AI engineers properly with all the tooling and adjacent functionality is what we're going to be doing. The third category that I think is out there is specialty infrastructure. And if you look at the specialty infrastructure category for the previous cloud, you have security, you have observability, you have network, perimeter. There's all kinds of companies that consistently compete effectively against the hyperscalers and have garnered greater valuations in the market overall. I had the privilege of working for one of them, Cloudflare. Cloudflare is phenomenal technology. And by the way, competes every day against the hyperscalers. But what they do better than the hyperscalers, and in a way that gives them a unique position in the market. I think the same thing's going to happen with specialty infrastructure for AI. And we're going to be going after the premium workloads that gives us an advantage in margin and long-term relationship and value that's being created for the customer.
Okay, completely random side note, because you just made me think about something that I've thought about half a year ago. Very random, you can answer this like maybe one sentence, but since you obviously have a very strong access to the talent pool in Israel and Tel Aviv, which has very, very, very strong talent in cybersecurity, how relevant is actually cybersecurity going to be as a part of a fully integrated cloud? I assume actually that is maybe for some people it's less sexy, but for the big enterprises, that's like super crucial, right?
Yeah, absolutely. Yeah. So we need to be, today we're meeting the AI engineer with the developer tools. Okay. This is going to like play out like an old movie. The developer tools that they need, We're also implementing the operational tools, manage Kubernetes and observability, and we're delivering more and more administrative capabilities, identity and access management, which, by the way, identity and access management takes us into security. There's no question that you need to not only check boxes, you need to deliver functionality. People are putting their data on our platform. And if we don't deliver the necessary protections, it's going to be horrific. So yes, delivering DevOps and security, just like people did with CPUs, just like the hyperscalers, we're going to have to deliver the same range of functionality. And we're doing that. A lot of today's workloads are connected by dedicated network, but more and more like inferencing, that's going to be over the internet. And we need to make sure that we're securing everything at the same level that you've seen with previous infrastructure deliveries.
Back to the vertical integration. We have a question regarding that as well. So again, one of the key parts of Nebius' approach is to have the fully vertically integrated skills in-house, or how Roman often called this the full stack approach. Do you already have evidence? You also teased us about some internal data you can't share, but do you already have evidence that your vertical integration creates durable differentiation, which of course should lead to higher margins? Or is it too early to prove or share that data?
It's more anecdotal. So I'm going to answer in the middle between the choices you gave me. It's more anecdotal. It's not enough yet to say it's a 15% advantage and we're seeing it in price. But we've had customers say to us, I asked the CTO of a big software vendor who we are taking business away from a competitor who's a bare metal player. And I asked, why are you moving your workloads? And by the way, I've known this person for a while, so he was pretty transparent. And he said, because my engineers like your platform better. Why? He said, the tooling makes it easier for them to spin up and manage their workloads and be able to operate on your infrastructure. Now, that customer, I can't speak about price because it didn't actually come up in that conversation, but I can actually talk about another scale AI company who recently admitted to us that they're willing to pay a difference because of the readiness of our platform, recognizing what they're seeing from other players in the market in terms of prices. So very anecdotal. We do have early evidence that it does make a difference. And as we build out more and more functionality, as we embed the capabilities that the engineer needs and integrate it at a lower level than you could with attaching to another service, and they see the performance and reliability advantages, we are going to get a premium as a result. We're also going to be winning their confidence in being able to get their job done. I think that if you play this out, that becomes the significant advantage that, as Roman put it, that full stack readiness sets us up for.
Speaking of winning, when you win deals, and you've been in a run, and I expect you to do much more winning, but when you do win the deals, do customers, or I assume internally you have some way of kind of noting down in some CRM, like why did you win the deal? Hopefully, some people do like why we lose a deal. You probably do a lot of like why we win the deal. Like what do the customers mention specifically as the edge, or like specific reasons why you win over competitors, other than the usual suspects like good user experience or like good price, lower risk? Like, are there some kind of stuff we don't know about already?
Oh, so something that I haven't mentioned. So we've talked quite a bit about the functionality and supporting the AI engineer. Another thing that's coming up on a regular basis, and this is, again, the team, is the fact that we have some of the best engineers in the market. Okay, these are not SEs that sold SaaS before, or architects that know how to use a marker on a whiteboard. These are fingers on keyboard, legitimate data scientists, AI engineers with hardware infrastructure skills. So when a customer is getting a support ticket addressed or getting implemented by one of our very, very talented customer experience engineers, they're actually interacting with a deeply skilled individual that is confidence building in the way that they're approaching the question or problem that they're facing. So it's at every level, as Roman mentioned. It's hardware, software, services as well. When you're an engineer, none of us are. Maybe you are. Maybe Addy is. I don't know. But I'm assuming you're not. Yeah. So engineers trust engineers, and they really trust engineers that know the problem that they're solving. And I've worked for companies where the engineer that takes the call has to escalate multiple times to get into the engineer that actually knows the problem. We bring that person forward. As a result, we have like first touch statistics that are extraordinary. Best I've ever seen of any company I've worked with, that we're able to actually react to escalations in minutes. And the result is confidence built and trust established with the customer.
I feel very I think that was like great validation for us. Something we've been banging drums about for so long is the engineering team. Like these guys have been building infrastructure for so many years, and it feels like everyone completely ignores that. But you mentioned the software. Actually, I want to double click on that. A big part of the vertically integrated solution is your software layer. What do you think? How does Nebius software stack create like long-term stickiness compared to just a bare metal offering? Like, what is the differentiation there?
Developers are creatures of habit. They get used to the tools that they use. And so if we can meet the AI engineer with a set of functionality configured in a way that actually understands them and understands the work they're doing, they're going to start with us. I saw this at Twilio as an example. Once you got the AI engineer on the platform, probably at Twilio, you got just a regular engineer on the platform. The next time they had a workload or a requirement that matched up, they just started with Twilio. There's a flywheel effect. We're going to be seeing AI engineers that learned how to actually run one workload on Nebius, and they're going to go into organizations or get other jobs, and they're going to be asked to do something and say, you know what? I want to do this on Nebius. And we're going to be seeing opportunities come through the back door. We just hired a phenomenally skilled developer relations leader who is signed up to help us to build a multi-million AI engineer community. My confidence is that community is going to drive interest and awareness and create motivation to use our platform. The stickiness is not the traditional technical stickiness, it's behavioral. That you win the hearts and minds of your primary persona, and you end up securing the future opportunities that they represent. Now, I did dodge your question, Addy, and I do feel like I probably should give it a little bit more attention. And so I do think that the more functionality that we deliver that's high caliber, and again, this goes back to Daniel's comment earlier about the hundreds of engineers. We built this whole stack. I said that I didn't build this. Okay, I'm the imposter here. Okay, the engineers that have been working on this and going through many sleepless nights to deliver the platform built it. And my hat's off to them, and the work that they can do at the pace that they've been doing it gives me confidence that we'll continue to build out the functionality, and we'll build out the capabilities that will continually expand the dependence that customers have on our platform, because we're able to take on the kinds of workloads that they have in a more efficient fashion than everybody else. I suspect, I can't say it specifically, you're going to see performance and reliability from our platform that surpasses everybody else because of the unique engineering capabilities we have. That's going to drive stickiness because people won't take the risk, or they're not going to want to have to deal with a fragmented set of solutions from some bare metal vendor that they have to cobble together to get 2 to 3 cents per hour less.
Awesome. And regarding the revenue and profit split, again, obviously it's not something you can just give us the answer to, but like just your gut feeling. Do you have any kind of idea in the long term what do you think would be like the revenue and profit split between value-added software and services versus just the bare metal part? The reason why I ask that is because if we look at the previous generation of hyperscalers, a big part of the revenue came from the software stack, but a majority, the biggest part of the profit clearly came from the software stack. And I think if you can just give us some directional split between the two, even if it's just a complete guess, I would like to hear you say some numbers so people understand this is not a nice to have. This is the main part.
It's one human's opinion here that the majority of profit, well, obviously we've already identified that, and revenue is going to come from software. The AI cloud, as we call it, is the lion's share of value creation for the customer, and the storage and modeling and inferencing and platform experience is going to drive the value creation that we can charge for. I'm going to tell you a story. Met with a customer at GTC-DC. One of our sales team brought together a great meeting. The customer is a well-known software vendor. And we asked them, what is the state of AI in your environment? And what do you need? What are you looking for? And he went on to explain his environment. And before I say the details, he didn't mention once GPU, did not mention GPUs at all. He laid out that they have 21 AI-enabled features in their platform, okay, supported by 21 different product teams. And they're being operated across 8 different regions with different suppliers across the entire stack of AI capabilities in their platform. He asked us, can you help us to give one platform experience to all of our engineers, to give us one control plane for all of our resourcing, to give us more control over the AI functionality that we're delivering? Now, we can't do all of that today, but that's the problem set that AI solution providers are going to need to deliver. So back to your question, Daniel, that's all software.
Yeah.
That is all software opportunity. And that's what we're building towards. So we could take those kinds of workloads and give them the kind of tooling they need in order to be able to deliver the continually expanding set of AI functionality that they're adding and ultimately providing to their customers. I think it's going to be the majority of our revenue in the fullness of time.
I'm sorry about asking you 20 different ways of elaborating on the software layer and the vertical integration, but I do think for many of the viewers and potential investors, this interview has been incredibly valuable in really understanding the degree of differentiation between Nebius and a lot of players in the market, and I hope it was also worth it for you to. I'm sorry that I annoyed you, but I think you did a phenomenal job at explaining the difference, and that's why I wanted to do this from like 20 different angles, because I think clearly the market doesn't understand it yet. So I had to annoy you, and yeah, but I think listeners will get it now. I think they should get it.
You did not annoy me, Daniel. I mean, if we could answer, I would answer. We just can't answer at this point in time. I mean, we don't want to give guidance that isn't yet ready to.
No, I'm super happy with the answer you gave. Like, even if this is like high level and qualitative, I think people understand that the quantitative numbers will follow the quality.
By the way, we're hitting on 2 connected concepts that I think are really important. You can't build software without engineers, and it takes a lot of engineers to build a lot of software. And if you're starting a company from scratch, it's really hard to get hundreds of engineers, especially in this market. So not saying a foregone conclusion, but we're set up really well. The team that Arkady brought together of hundreds of engineers that already know how to work together and build products are building products that are creating sustainable advantages in the market that will drive the margin expansion that we were talking about and become the majority of the value that we're delivering to the market.
To close, we just wanted to ask some questions about you, actually. What's your story behind joining Nebius?
I left Cloudflare, and I was looking at a lot of companies. As a matter of fact, I talked to pretty much everybody in AI. All of my mentors and colleagues are saying that whatever you do next, you got to do AI. Got to do AI. So I was talking to everybody, and I was very, very fortunate to have introductions to all the name brands and had great conversations. And I kept hitting these challenges, that some of them were so overvalued, I couldn't see the upside. Some were functionally or technically, unique in the category that they're in, but the category was small, or the category was at risk, that one of the foundational models was going to eat them. And by the way, I watched it happen. Some of them, flared up and disappeared. So I was thinking I had to find something horizontal so that I wasn't going to be facing the risk of a technical, functional, or vertical category. So looking at horizontal players, I was actually at an event put on by Accel. Accel's been a good friend to me for a long time. And I was introduced to Nebius by one of the investors that led to a conversation with the company. And a great relationship with True, and True is the recruiting firm that they were working with, led to some accelerated discussions with the organization. I met Roman, and then I met Andre, and then eventually Arkady. And what I all of a sudden saw was these are super smart humans that had no ego, and were looking for winners that can help them to accomplish big things. Also, they had an extraordinary offering in the market already that met that horizontal opportunity, that was attached to a TAM that was massive. And they were already public, well capitalized, and they have a capital engine that will fuel the growth that they are anticipating. I mean, I knew within a matter of a few meetings that this was a unique opportunity, and I switched from being the one asking questions to figuring out how to close the opportunity. So very privileged to have the opportunity to join. Very excited about the organization, and I'm thrilled about what's in front of us.
I think it's fair to say maybe as investors that have listened to every single podcast that Nebius has put out, whether it's Arkady, Roman, like literally we've listened to every interview at least twice. And I would say as investors, the team can be incredibly grateful to have you, because what you bring to the table is an aggressive, direct, but I love how aggressive you are. You say things that I know that many other people of the management, they're very competent, but they like to play it safe. And I think you bring a level of aggressiveness and a hunger and an ambition to clearly state the degree of ambition this company has. And as an investor, I love that. I just love that.
Well, thank you for saying that. And my colleagues are humble. Maybe I need to learn from them and be a little more humble. But for now, you got what you got. I'm an old guy. I'm not going to learn new tricks.
No. When your first interview started getting shared around Twitter, I literally sent to Daniel, like, we got to get this guy. He'll be so good on camera. It'll be way better. Can we interview this guy? So yeah, I guess like finally, what makes you most excited about the future?
Well, actually, it's a lot of it's execution, and what you guys should be looking to me for, which is, I joined the organization 5-6 months ago, and we're building the team to cover the market. We don't yet cover the market, and you could just add up the number of sales headcount on LinkedIn and see that. So we're building a go-to-market machine that's going to reach the four corners of the market. We're bringing in world-class leaders. We're bringing in amazing humans that are going to allow us to reach the four corners, and we're going to be able to sell the capacity that we're bringing on, so that we continually exceed the targets that we're setting. So job one really is execution. Job two is raising the sights to go after the enterprise. There's not a stampede into AI from established legacy enterprises yet, but we're going to meet them when the stampede occurs. And today we're being very focused on specific workloads that are already in the enterprise. And we're building out a verticals-based approach to scale our enterprise readiness. So we'll meet the stampede when it comes, and we'll be ready to be able to service the significant growth that will come out of that part of the market. That is what we're all looking forward to. When that happens, you'll see the next set of growth figures supported well past the numbers that we've shared for 26.
Basically, the rocket's going to keep compounding.
We're just at the beginning of this. This is generational. This is generational. I could say that. I mean, I've been in this industry for a generation, half a generation. This is the biggest wave and the biggest opportunity. And this is a very unique player in this category. And I think that Nebius will be seen as an iconic company that contributed to the massive transformation in the fullness of time. That's my confidence. We're building an iconic company that makes a difference.
It's great to hear that from you. When I tell people that this is generational, or this time is different, this is the once in a lifetime kind of opportunity, they tell me, what do you know? So it's good to hear it from someone that actually has been through multiple of these opportunities and can say this is a generational one.
Addy, you've got vision. You've got vision. Don't let them tell you you're wrong, and just be confident in your vision.
Awesome. Thank you so much, Marc. Hey guys, hope you enjoyed that episode. If you did, the best thing you can do is share this with someone else that might enjoy it too. Otherwise, it's helpful if you leave a rating or comment on whatever platform you're watching or listening to this on. If you're interested in appearing on a podcast or sponsoring it, then you can reach out through the email on the screen. Otherwise, I'll see you guys in the next one.